It's 10 a.m. in Lagos, Nigeria. Time for Business Morning on Channels Television. You're welcome to 55 minutes of great business talk. I'm Ini John Mekwa. Well, let's start from the global oil space. A lot has been happening there. Well, for this morning, prices fell as the U.S. dollar strengthened following signs that the U.S. Federal Reserve will tighten monetary policy in the world's biggest oil user. Futures pulled back amid a broader decline in financial markets, triggered by the March interest rate increase telegraphed by the Fed and as the dollar climbed against its major peers. Brent crude futures were down 57 cents to $89.18 a barrel after earlier falling by as much as 1.1% to $89. Brent climbed 2% yesterday. U.S. West Texas Intermediate crude futures were down 83 cents to $86.52 a barrel after falling by as much as 1.2% to $86.34. It gained 2% also in the previous session. Crude prices surged yesterday with Brent climbing to as much as $90 a barrel. That was the first time for 7 years amid the tensions between Ukraine and Russia, the world's second largest oil producer that has fanfares of energy supply disruptions to Europe. Also in the oil space, but in Nigeria, the Nigerian National Petroleum Corporation is requesting the sum of 3 trillion naira as fuel subsidy for 2022. This is according to the Minister of Finance, Budget and National Planning, Mrs. Zainab Ahmed, who briefed State House correspondents after the Federal Executive Council meeting chaired by the President. She said by implication, the federal government will have to make incremental provision of 2.557 trillion naira in order to meet subsidy requirements, which currently averages 270 billion naira every month.
For the first time this year, President Muhammadu Buhari chairs the virtual Federal Executive Council meeting at the State House. A number of ministers are in attendance as crucial issues contained in various memos are addressed, including fuel subsidy removal, which has made the headlines recently. Moments later, the Finance Minister, Mrs. Zainab Ahmed, announces a request presented by the Nigerian National Petroleum Company Limited following a recent decision to extend the fuel subsidy.
Population, heightened inflation, and also that the measures that needed to be taken to enable a smoother exit of the fuel subsidy are not yet in place. It was agreed by Council that it is desirable to exit fuel subsidy. The Nigerian National Petroleum Company, NNPC, has presented to the Ministry a request for 3 trillion naira as fuel subsidy for 2022. And what this means is that we have to make an incremental provision of 2.557 trillion naira to be able to meet the subsidy requirement, which is averaging about 270 billion naira per month. That will end up with incremental cost of 3 trillion in 2022. So this has been considered by Council, and we've also been asked to approach the National Assembly for an amendment to the fiscal framework as well as the budget, to also further discuss with NNPC on how to make provisions for this and also how to rationalize this expenditure.
When asked about how the additional budget would be funded, the minister reveals strategies to be employed.
So we hope to reduce it from that 3 trillion. That is one. Secondly, we hope to reconcile to reduce the cost, but also we have several reconciliations with NNPC, and NNPC itself is owing in some cases government. So we want to be able to settle some of the subsidy costs through this reconciliation process.
The executive is also seeking restoration of certain funds deleted by lawmakers amounting to 103 billion naira.
Part of the request that Council has approved today is for the National Assembly to repeal clauses 10 and 11. So clause 10 is referring to a provision that has been made that will enable the EFCC and the NFIU be able to take 10% of whatever collections that they recover. We're asking for that to be repealed because this is in direct contrast to the acts of these two agencies, and also it is in contravention with the Fiscal Responsibility Act and the Finance Act 2021.
Thank you, Honorable Minister. Thank you. Okay.
Are there other doubts and concerns regarding the actual number of barrels of crude oil Nigerians consume in the country, when the right time will be to remove fuel subsidy, and whether or not the present administration is simply pushing the burden of fuel subsidy removal onto the next administration? But the president's spokesperson, Mr. Garba Shehu, insists that the APC is the next administration. From the presidential villa, Gloria Umezuke, Channels Television News.
And on that note, let's discuss the 2022 outlook for the petroleum industry with Senior Manager, Oil, Gas and Power Group with Anderson, Nigeria, Temitope Kolade, joining us now. Following up on that conversation, good to speak with you, Kolade. Good morning.
Good morning, Ine.
Yeah, so, I mean, like you saw our reporter there, especially the request of 3 trillion naira to cover subsidy. Obviously, that is one of the biggest stories going on in the oil space. How does this affect your perspective when we're looking at the outlook of the petroleum industry for 2022?
Thanks so much, Ine, for having me. And on the question of subsidy removal, I would like to say that, in my view, it's a socioeconomic policy that has been put in place. I know that generally people expect that from an economic perspective that subsidy will be removed. But if we look at it from a socioeconomic perspective, we know that that decision to leave it or remove it, it's indeed going to impact very many people. And we talk about energy poverty, really. The question is, as we think of implementing a fully deregulated downstream sector, we also need to think about how it's going to impact the populace, and that's why the government is taking that decision. I'd like to also mention that indeed, in very many other countries of the world, we have subsidy being implemented one way or the other. Maybe it's not with respect to energy, maybe it's with respect to health, maybe it's with respect to food. So subsidy is not a strange talk indeed, and I think that the government has deemed it fit that that's the best line to toe, especially at this time, and I think it's a fair one.
Well, how does it affect the outlook for the year when you look at the industry? Because a lot of people had built expectations for 2022 on the PIA. So apparently this brings some changes to some of those expectations and forecasts.
Yes, indeed. And that's why we need to conceptualize what exactly is happening with the introduction of the PIA. So the PIA is an omnibus bill that impacts both the upstream sector, the midstream, as well as the downstream. To a very large extent, the issue of subsidy has to do with the downstream sector. I know, as a matter of fact, that the Minister of Petroleum has also mentioned the proposal of suspending the implementation of the PIA, but a critical look at the provisions of the PIA as it were today gives us reasons to also think that there is a provision, a savings provision that allows for a phased implementation of the PIA in itself, such that we could have implementation going on for the upstream sector, while the downstream sector would then be phased in line with the subsidy. Right. If you look at Section 205 of the PIA today, it talks about the fact that there should be a free market operation with respect to price of petroleum products. But there is also a proviso that says that there could be a regulation where we see that there is a monopoly of the supply of that product. And that's more like what we still have today. NNPC is a sole importer as we see it today. So it means that it already took that into consideration. However, I'm not going to just predict what's going to happen, because the Minister of Petroleum has already mentioned that he's sending a proposal to the National Assembly. And my expectation is that the National Assembly will take a very critical look at the request and say that indeed, are we going to suspend the entire implementation of the PIA, or is just going to be a phased implementation of the PIA, considering that we can then have a situation where, I mean, with respect to the deregulation of price, of petroleum price, they still have it, considering the current situation of things in terms of the socio-economic situation of the people in Nigeria, and ensure that every other thing goes right. Importantly, because of investment, how it impacts investment. When the PIA came on board, everybody was happy that we have some certainty with respect to the operations within that sector. So indeed, I think that the way to go is a phased implementation of that PIA to ensure that we encourage investment indeed and give certainty to people already planning with respect to the passage of the PIA.
Yeah, but you know, when you talk about certainty, alongside the phased implementation of that, a lot of people would say that they can't go together because nobody actually saw this coming. Nobody saw a postponement or the extension of the subsidy regime. Everybody just thought that we have the PIA by February, we're going to start. And, you know, so it seems those two words actually cannot go together.
Well, indeed, if you look at it again, yes, the implementation of PIA is meant to commence immediately, but we'll look at the impact of all the reality, right? We still import as at today. We do not have enough refining capacity within the country, right? So to a very large extent, you see that if we say that indeed the PIA should be implemented immediately, with respect to especially the issue of petroleum products. I mean, PMS for being the dominant product, right, is going to have a very far-reaching implication on very many Nigerians, on the price of a commodity in the market for transportation and all of that. So yes, indeed, people didn't see it coming, but I believe also that a couple of investors had it, in mind that it may not exactly be a straightforward implementation when it comes to the downstream. I'm not taking away from the fact that we have a Dangote refinery, for instance, that is also a private business, right? And the expectation is that if we're going to have that one happening in Nigeria, right, we then need a situation where it's also a free market. I mean, you can produce in Nigeria, and of course, and the expectation is that in all of this, there is a PI implementation committee, right? The expectation is that the investments, the investors will sit down with the government indeed, and sit down with the committee. The Dangote Refinery Group, for instance, would have some membership on that to ensure that everything is put into proper perspective and we don't have something that makes the country worse off in the long run, because we understand the importance of the Dangote Refinery to the economy of Nigeria and, of course, to the petroleum sector in general. So indeed, I think that is a consultative approach that would help us achieve what we need to ensure that we don't have something that impacts the people so negatively. And of course, the investors are also protected with their investments.
Yeah, well, everyone seems to agree that, I mean, the subsidy will have to go one way or the other. But of course, it is what do we put around, or what do we place, what preparations do we have before the subsidy goes? And of course, you've mentioned Dangote, which is one of the hints that the federal government has also been talking about. But the other one is our own, as in the government's, the public refinery. Presently, the members of the House of Reps have just set up a committee to find out the capacity of the refinery. So we have Port Harcourt refinery being rehabilitated. We have other two ones that are supposed to get attention very soon. But it seems we still do not know their capacity. And then more worrying is that there's no certainty as to the rate of consumption of this product. So if we do not have these figures, then where do we work from?
Well, where do we work from? We work from what we have. I mean, we can create things that do not exist. And of course, the rehabilitation of those refineries have experienced some setbacks. Of course, the expectation, however, is that with the renewed focus from the current government, we would have that moving very fast in the current year, especially in light of the implementation of the PIA that everyone looks forward to. And not forgetting the fact that there is also modular refineries that we have a classical case of the Walter Smith one that is working already, and we have others that are to be commissioned soon. So again, it's not going to happen suddenly. We expect that there will be much participation from the private sector through the modular refineries, of course, through the Dangote one. The government refineries, of course, under rehabilitation, we can only hope indeed that very soon we'll have those ones fully rehabilitated, and we'll be able to say for a certain this is how much can be produced from that. But if you look at the fact that the Dangote refinery, for instance, will be giving us or will be consuming about 650,000 barrels per day of crude, we see that it's a huge capacity already, and it's going to take a whole chunk with respect to the consumption requirement within the country. I think that by the time we have the rehabilitation of the government's own refineries completed, they will be incremental, and they will just help add to the success that we would see from those of the Dangote and other modular refineries that are coming on board.
So one of the prizes that, according to one of the spokesperson from the presidency, that the country will have to pay for sustenance of subsidy would be more borrowings. And of course, we've been talking about the debt stock of the country for a while now. So how for you does this affect our growth? IMF has reduced global growth, even though Nigeria has been retained at 2.7%. How for you does this, and then the good news in the oil space, yesterday we saw Brent hitting $90, even though it has tapered a bit this morning. You know, how for you does these factors, how do they play together to speak to the growth forecast of the country? The risk of more borrowings because of the retaining of the subsidy, find the good news of the oil prices. But of course, we cannot even make the most of it because we are not even hitting our quota that the OPEC has given to us. What do we see, you know, in the nearest future of this country?
Yes, indeed, we have multifaceted problem. And then when you talk about debt, debt is inevitable. Again, it goes back to what exactly do we do with our debts, right? We have talked about infrastructure. We've talked about the moribund refineries, for instance. The expectation really is that, when we also remove subsidy, and you think about the fact that the subsidy on diesel, for instance, has been removed for quite a while, and the expectation at the time was that we're going to have the subsidy gains plowed into development of the refineries, but we've not seen so much. So the question is that indeed, if we have this subsidy removed, even today, what exactly does the money go into? Do we see the immediate implementation with respect to the infrastructure that we want to see? And until we have those infrastructure, the growth can only be at a particular rate. We also have issues with human capacity aside from the infrastructure. But very importantly, if we have the infrastructure in place, especially in the oil sector, the road, the transportation, and all of that, I believe that the growth will be fine. It's not out of place to have debts, but what we use the debts for is what is more critical. And I expect that indeed, if the government helps to put the debts, we see a couple of projects going here and there. The Presidential Power Initiative is also helping to boost production with respect to power and supply of power in the country. And if all of these infrastructure are put in place, I believe that in no time at all we'll have the growth taking a very good turn, especially with us notwithstanding the fact that, of course, we have to borrow to do that. But the borrowings will then begin to yield some great results if we have them put in the right place.
All right. Thank you so much, Temitope Kolade, Senior Manager, Oil, Gas and Power Group at Anderson, Nigeria. Thank you so much for sharing your thoughts with us, and enjoy the rest of your day.
Thanks, Ine. You too. Have a great day.
You too. So after the break, commodities market updates is next. You're watching Business Morning on Channels Television. Welcome back. Well, the surge in the price of oil is still at the fore of the commodities space. Adesola Sumoni joins us now from Reading in the UK for that conversation. Hi, Adesola. Good morning.
Hi, Ine. Good morning. Thank you for having me on the show.
Good to have you. So we saw a tapering of oil prices this morning after that applaudable and exciting high yesterday. Some have called it profit-taking. What's going on now?
So, like you've seen, oil has had a volatile week, declining 2% on Monday and then recovering. And many factors are responsible for it. But one of it is, like you said, data yesterday from the American Petroleum Institute showed a significant drawdown in U.S. crude stockpiles by about 875,000 barrels. We also see, strong demand. Demand is recovered, which the drawdown, signifies, strength in demand growth, which we expect to reach pre-pandemic levels. Then also we are seeing geopolitical tensions in Eastern Europe between, the United States and Russia over Ukraine. We are seeing tensions also in the Middle East. All of this together point to the fact that oil prices are going to remain elevated. Obviously, we're going to see mild swings in the price, but overall, it's going to remain elevated going forward. Some analysts have estimated that it would average around $85 per barrel this year. Some more optimistic analysts put it at around $96 per barrel this year. In fact, Goldman Sachs sees oil prices reaching $100 per barrel around the third quarter of this year.
Wow, those are very interesting figures you're calling, and sounds really good. I mean, for Nigeria, that we have $62, so you can imagine the margin. But then it also brings to the fore, how much are we producing? What are we presenting out there? How much benefits are we getting from all of this?
Yes, it does. I mean, yeah. So yes, we like I mentioned, oil prices are kind of like elevated right now, reaching trading around 7-year high of it's $8 per barrel. But Nigeria is not fully enjoying the benefits of the higher oil prices because, according to OPEC Plus, our production quota is around 1.86 million barrels per day, but we are only able to produce about 1.3 million barrels per day for many reasons. One of it is, vandalization of pipeline infrastructure, among other factors. So because of all this, we are not able to, fully enjoy, the benefits of the higher oil prices. There's also the issue of, remittance of from the NNPC to the central bank or to the consolidated revenue fund, which the NNPC have not been remitting quite enough because of the high amount they have to pay, to subsidize PMS in the domestic market.
Yeah, well, I see that on your slide where you said that the Monetary Policy Committee has asked the NNPC to address the dwindling oil revenue. But what exactly can they do about this?
That's an interesting question. But let me give you some background, right? So first, what is going on? The NNPC gets some dollar inflows from exporting crude oil in the global market. And then they use part of that money to pay for importation of petroleum products. However, as prices rise in the global commodities market, as oil prices increase in the global commodities market, it increases the landing cost of PMS in the domestic market, and it also increases the amount that the NNPC has to pay to foreign refiners. And that has many implications for Nigeria. One is that there's less money to be remitted to FAC, and that has other implications. For example, if you look at the composition of state government revenue, you see that around 77%, north of 77%, come from FAC allocation, with the rest coming from the internally generated revenue. If you remove Lagos from that equation and maybe Ogun State from that equation, the rate increases to around 88%. Now, what does this mean? It means that as FAC is reducing, there's less money to be shared across states, And that has implications for state governments, budget implementation. That's why you see things like, state governments being unable to pay salaries. You see a lot of abandoned projects. You see state governments struggling to pay pension for their workers, and so on and so forth. And in this year, it is particularly important because this is a pre-election year. So we may see a lot of state governments, trying to increase their expenditure, trying to complete some projects just to, be in the good books of the voters. And with FAC reducing, it would probably increase, the borrowing requirement of these state governments, and that has implications for, domestic interest rates in Nigeria.
Well, gas is also in the news. Africa is, including Nigeria, good enough, is increasing its gas production. What's driving this, and what does this? How does this affect the gas space in Nigeria? We've had to talk about gas for a while now.
I mean, so the news is here. Tanzania is, going to also become one of the exporters of gas in Africa. They've found some gas reserves, and they're trying to bring the project up to speed to begin to export natural gas. And that is positive for Africa as a whole because it will probably increase the continent's gas exports. And this is particularly important because in the global market now, the gas prices are high. We are seeing, especially now with these tensions with Russia. Russia is one of the largest producers of natural gas globally. So with these tensions with Russia, gas prices are also elevated. But with Tanzania coming on stream, obviously, they're not going to start producing gas today or tomorrow or even this year. But I think it's positive for Africa as a whole. But in terms, it's positive for Africa as a whole, making us, a big producer of natural gas. The other producers in Africa are Nigeria, we have Angola, we have Equatorial Guinea, I think Cameroon, with Nigeria being the largest. So that is positive. It also can, has the potential to increase our supply of natural gas globally, but that is more of the medium term rather than the near term.
Okay, so let's go to commodity space now. The price of cocoa in global commodities markets is up almost 1%, 0.92 on improving demand. What are the other factors affecting cocoa at this time, and what's the near-term outlook from your perspective?
I'll say it's sweet tooth. So coming from Halloween, we've seen, especially in the United States, in Europe, we are seeing, demand for chocolate increase coming from Halloween, and then Christmas, and then now there's Valentine's coming up, and then after Valentine's, there's Easter. So all of these, subsequent events are increasing, the demand for chocolate, which is increasing, the demand for cocoa. Also, we are seeing a drawdown in cocoa stockpiles in Europe and North America, and those are also contributing to, those factors are also, contributing to the stronger demand for chocolate and the stronger demand for cocoa. So these factors, I think, they're likely to persist in the near term. Also, as risk assessments for the Omicron variant is looking a little bit mild, so we may further see some more demand for cocoa coming on stream. But also, we are seeing we expect huge supply also coming from the big producers in Ivory Coast and Ghana. So that may kind of moderate, further price increases in cocoa going forward.
Yeah, and also we see Kenya coffee is in the news.
Oh yeah, so the price of what's happening now, the exports, the price of Kenya coffee at their auction was down a little bit. Was it? No, sorry, it was up a little bit, and I think that's because of easing of restrictions in globally is increasing the demand for what's it called? Quick coffee, or no, what do you call this? Not quick coffee. It's increasing the demand for coffee as people move back to work. We are seeing the price of coffee increase slightly, and that is why.
So, hello, are you there?
I didn't get that. What did you say?
Okay, I was asking what else is happening in the commodities space.
In global commodities space, we are seeing some activity. We are seeing, for instance, for corn and wheat, we are seeing their price decline because of the issues around production, tight concerns around supply disruptions, especially because of these geopolitical tensions between Russia and Ukraine that traders are afraid of, traders are anxious that might affect, that might affect, what's the word? Traders are anxious that might affect supply of corn and wheat coming from Ukraine and Russia. We are seeing the price of cocoa increase, like I told you, due to strong demand in chocolate. For sugar, we are also seeing the price of sugar increase. Sorry, we are seeing the price of sugar decline because of the stronger US dollar, which makes the commodity more expensive to holders of foreign currencies.
All right, just before we let you go, Adeshola, where do you see the price of oil going by the end of this week?
I think oil prices are still going to remain elevated to the end of this week. Yes, we may see some small fluctuations in oil prices, but I think it will still trade around the 7-year high of $88 per barrel.
All right. Thank you so much, Adeshola Somonu, analyst with Financial Derivatives Company. Thank you for joining us and sharing your thoughts with us this morning.
Thank you for having me.
We'll take a moment. When we come back, we'll do an opening call to the markets. It's now time for the markets, and I'm glad that it's going to be good news. The market ended in the green yesterday. In fact, very good news.
Yeah, Yesini, good morning. Yesterday was an insane day. We saw gains of about 2%.
Positively insane, you mean?
Yes, on the NGX benchmark at intraday, that was running about 2%, and a remarkable high that continued to the end of the day in positive territory at 1.29% yesterday. The all-share index advanced to the 46,000 level, while the market cap is moved up to the 25 trillion naira mark. Yesterday's performance was supported by investors' demand for Airtel Africa, which was up 10% yesterday. We've seen remarkable drive from Airtel Africa recently. Anytime they're up 10%, the market just goes overboard, like madly insane gains that we see. And now the year-to-date return has moved to about 8.9%, which is very, very great. Now, total volume of transactions traded yesterday rose by 32% to 314.39 million units. It was valued at 4.62 billion naira, and all exchanged in 4,107 deals, which was the only dip yesterday. But it doesn't really matter because the volume and value made up for the loss or the decline in deals. Deals doesn't really help in the market. But we see massive gains in the sector, especially for the ICT. But banking was the only gainer yesterday. Industrial, consumer, insurance, and oil and gas were all in the red, but that didn't stop the market from flying in. I'm just waiting for today's gain. I don't know what to expect today, but I'm very hopeful. Now we'll move over to the NASD unlisted market. We saw that they also made a very big rebound yesterday, up 1.27%. The market is really rallying, and I'm worried, possibly because of, investors positioning for the full-year dividend. Results are going to be, out very soon, and we're just waiting. Maybe they're taking positions, rebalancing their portfolios, and hoping that, they will reap the benefits, more gains for their pockets and their banks. Now, the NASD index was 744.17%, points up yesterday. Market cap settled at 630.15 billion naira. Volume yesterday also rose. 3.08 million units was traded yesterday, and 47.32 million naira was the value of transactions traded in 13 deals. Now we'll move over to the fixed income market, where trading was a bit quiet, a bit on the bullish side of the market, but we saw a bit of transactions for the 2027, 2029 paper. We move over to the NTB auction, NTB section, where we saw the NTB auction yesterday. The results of the auction, I'm going to read off the paper right now. And I said the CB and the DMO offered maturities worth over 130.33 billion naira, given the level of subscription of 475.63 billion naira on offer. And the DMO allotted 223.73 billion across the standard maturities, with demand skewed towards the 1-year paper. That's the 2042 paper. Now, the stop rate for the 91-day and the 182-day paper and 364-day maturities dipped. Now, the 91-day paper dipped by 2.48%. The 182 paper dipped by 14 basis points. I think the stop rate for the 91-day paper was at 2.48%. It dipped by 2 basis points. Now, the 182-day paper dipped by 14 basis points to settle at 3.3%, while the 364-day paper was 5.39%, dipped by 10 basis points. Now, we're just going to go quickly back to the equities market to talk to Tajuddin Olayinka, stockbroker at Valmont Securities. Tell us what's happening with the markets. Good morning, Tajuddin.
Yeah, good morning, Will.
Tajuddin, the market took off to a sluggish start this week. We saw it started negative, but on Tuesday we saw a sluggish pickup. But yesterday it rebounded massively by 1.29%. What's driving this renewed interest, especially with the stocks of Airtel Africa?
I think, what is happening is that, market is actually showing the sign that it has fully entered, the year-end rally. Some listed companies will have their year-end as December 31st. So, and some of them even coming up with, unlimited results of their company. So, market is actually involved in some kind of, what I would just call, that same year-end rally. And for Airtel, if you look at it, it was not only Airtel that lifted the market. While Airtel lifted the market, the losers side also had some kind of, heavyweight there too. And if you look at the combination of the Cabri, SBM Holdings, Sandvik, and Boa Cement, they also depressed the market in a way. So it was more of a balanced market. Everything around what happened yesterday was more of a balanced market. And again, if you look back to what happened, what has happened over the last 1 week, the index showed that there have been some movement, but that significant movement of yesterday actually put the market up and made it more or less a balanced market. I think we are just in the season of the dividend and the business. So what we're going to see at this time is more of bargain hunting and profit taking. So to be seeing that kind of rally is not something unusual. And again, if you also look at Airtel and MTN, they attracted more investment than many other stocks. So it's like investors are showing interest in that telecom sector, even though MTN did not move the market, but Airtel moved the market in a way. But more investment went into those two stocks as well.
So I would say the CBN maintained the status quo in its decision on Tuesday. Do you think this is a contributing factor for this rally we're seeing?
Yes, because market has prepared itself for possible. It's not just because of the what CBN did, but because of the fact that the government has come out to say that it was suspending the withdrawal of fuel subsidy, and so what CBN did on Tuesday was not unexpected because CBN could have taken a different route, but with what government has done to say, okay, at this time we don't think we want to go ahead with the withdrawal of fuel subsidy. So every just the same way CBN adjusted its position, market is also adjusting. So that is what is responsible.
So are we expecting this to be sustained, or after the earnings season we'll be back to a choppy session?
Well, usually the year-end rally ends once we have received all the results and dividends have been announced. So yes, normally market is always full of up and down. You will have the usual rally, and then you have sometimes bearish trend. It will continue to have the kind of balance. But don't forget also that there are other issues to contend with this year. The capital gains tax is there. There are several issues, that are more like headwinds to the market are there. And so after this rally, we might see market, just go down slightly to reflect on all those headwinds and to see how investors can navigate, those headwinds.
Thank you so much, Tajuddin Olayinka, stockbroker at Valmont Securities Limited. We'll just see that, hope that the headwinds won't overshadow the tailwinds, and we're hoping that more positive news will come into the market. So, Ini, that's what we have for today.
Yeah, well, thank you. It's been good news, and we hope that it's sustained at least for the remaining 2 trading days for the week.
We're just hoping
Let's hit 47,000 level.
That is where we're heading. So probably 50
okay.
50 is what we're going for.
I know Anita predicted 50, but but you know, Bitcoin has been predicted to hit 100,000 since last year, and we're still waiting on that.
Maybe it's taking, like you say, taking a rest to come up again. Maybe the bull will just, you know, just hit 50.
Taking a pull back for a
comeback. For a comeback.
We are watching. Thank you so much, Will. So now we'll take another quick break. When we come back, we'll head to London. Do stay with us. It's Business Morning on Channels Television. You're welcome back. Well, after yesterday's meeting, it seems every market is reacting to the U.S. Federal Reserve's indication to increase interest rates, even though it comes as no surprise. We've been talking about this since last week at least. Well, let's find out if there was anything that changed in the UK markets and business space. And of course, we have Juliana joining us now. Hello, Juliana. Good morning.
Good morning, Innie.
So the morning after, what impact has this indication of a March rate hike had on the UK?
Yeah, it's pretty interesting, isn't it? The market continues again. This time is up by comments made by Federal Reserve Chair Jerome Powell, indicating really what market had already priced in. There would be to their next policy meeting in March. This is expected to know that inflation is 40-year high. Not only is it affecting big business, it's also affecting new consumers much more for second-hand cars, rentals. They were. That's not just happening in America; it's happening in the UK, running at about 5-4%. This is the highest in 30 years. How is it affecting the market today? Well, the FTSE pretty much firmly in the green. This is not any indication it will rise. Is banks with low profitability over the past couple of years due to very, very rates here in the UK. Yet increase it from 0.1 to 0.25%. However, they've still been suffering. But all of them, the top prices, Standard Chartered, Lloyds, Barclays, NatWest Group, they are all trading up between 2 and 3.87%.
All right, Juliana. Well, we still have a whole lot to talk about, but I guess we'll just do that during Business Incorporated at 1:30. We would really like to know how the market would react, especially at intraday, and of course the issue of the car production. But we'll do that at 1:30. We'll talk to you later.
Thank you.
So let's go to the crypto space now and see how this same, I mean,
it's all about reaction.
It's all about reaction.
It's all about market reaction right now. And, you know, obviously the crypto market is in a pullback right now after we got the hawkish stance from the U.S. Fed. It's a red market this morning. We've seen the market cap there's down by 2.64%. Volume traded, $106 billion, down by 9%. Bitcoin dominance, 42.02%. Price of Bitcoin this morning, $36,172. It did try to get above the 38,000 range, and it's not been able to stay above the 38,500 resistance. It's down 2.96%. Obviously, traders reacting to the Fed decision. 24-hour volume, $32.34 billion traded in Bitcoin. Price of Ethereum, 2,406. This one's trying to also stay above the 2,500 range. It's down 2.01%. Volume traded in Ethereum, $22.73 billion. And we see the top possible market cap. It's all red except Cardano, surprisingly there. Cardano is keeping head above water there. It's up by 1.10%. And the biggest loser there is Solana. It's $88.86, down about 5.72%. And BNB, $367, down 3.13%. XRP is still there, 60 cents, down 2.51%. XRP has been struggling to stay above 80 cents, but, you know, market volatility, and when Bitcoin is quite volatile, you know that altcoins are going to suffer a bit. Let's bring in Bjorn Martins now, CEO Passive Income. Hello, Bjorn.
Hey, good morning, Ladi. How are you doing?
Good morning, Bjorn. Great to have you. So, you know, we've had all manners of projects, you know, in the crypto space. You know, from 2017, we've had different promising, you know, crypto projects. I can name a few like Trig and some other ones, but somehow they've not been able to remain relevant even till today. Most of those coins are no longer on coin market cap, you know. So why are these projects, why aren't they finding use case, you know, use cases outside of the crypto industry?
Yeah, really good question. I think it's really depending on how the CEOs, the people that start these projects, how dedicated are they? How much do they really want it to become a success? Was it for them just a rich quick scheme, or did they really have a dedicated use case, or did they just came up with it in a night and made a project around it and tried to collect money? On the side as well, I think it's really hard as there are coming out so many cryptocurrencies on the same moment every single day. I think in January 2021, we had about 300,000 tokens be released in 1 month. That's absolutely insane. It's just not able to always be seen between those. For example, I think it's very important is that the token really starts a movement and be different from the status quo. A good example is like a small token last week started a chat. I cannot say the word, it's not allowed on TV, I guess. The FUCK, influencers. And this is a real movement. This is against the status quo. And this will get you a lot of people coming in. I think this can make a change. But further, it's really hard to get seen if you don't do the right marketing and don't have the right use case and the right dedicated team behind the project.
All right, because, you know, most of these influencers, you know, they come out, they say, this is the next Bitcoin, this one is going to, you know, do incredibly well. But at some point, most of them are rug pulls, you know. So right now, it's all about play-to-earn tokens and the metaverse. And obviously, most of them are going to fail, right?
Yes, I can tell you there's a 100% guarantee. 99% of all those tokens will fail, as most people will just try to hit the hype, run on the hype, and make some quick bucks out about it. But I can assure that a lot of these tokens, though, that have dedicated teams, maybe not will rise this year, not next year, but as long as the team will stay dedicated and works on the utility and use cases, this will rise for sure. And this is what I've seen with this little small token lately. I think it was called Vigilante Inu. I don't even know. It looks like Shiba Inu. But they have a passion. They kill the status quo, and that's what I think matters.
And most of, you know, argue that it's better to, you know, look at tokens that are more decentralized, you know, that don't have, you know, some kind of CEO leading it. What do you think?
I think these things are honestly the best, because this is why cryptocurrency started. Look at crypto, at Bitcoin. Satoshi Nakamoto, nobody have ever known this person. He's never put his face out, as he had a vision. He was standing for decentralization of the financial system in this world economy. And I think he did quite a good job. And this means that you don't always need to be famous or a big person if you just make a real big change.
All right. Okay, let's talk some, you know, market movement. Now, we've seen Bitcoin react to the Fed decision yesterday. We've seen a pullback from that 38,000 range. What are you seeing, you know, going forward with Bitcoin price?
Going forward with the Bitcoin price, it's really hard to say, as at the moment the market is really didn't react well on the latest dip. We haven't seen a most beautiful recovery. So I'm honestly convinced that we are in kind of bear market. As most of the people, they stepped into crypto, they lost some money, got scared, and jumped out again. And this is the cycle we all in all the time. I'm very confident though that Bitcoin has been above 30,000 for over a year now. So yeah, we are really making big steps for Bitcoin. And next, halving, so say in 2024, I will expect Bitcoin to definitely go above 100K piece.
All right. Well, I guess the problem is the newbies coming and buy at the top. All right, Bjorn, thank you so much.
Thank you. Good day.
All right, have a good day. All right, so let's see the top gainers there. We have T-Fuel there. That's the gas coin for the Tether network there. It's 17 cents. It's up 32%. It's doing really well this morning. And we also have Tether right there following T-Fuel, $2.98, up 11%. And we have Decred there, $60.72. It's up by 8.14%. And top losers, it's double-digit losses there. So it's quite a mixed market right now. We don't know which way it's going to go next.
And I know you're going to ask me what's my prediction for tomorrow.
For tomorrow, yes. Your
okay, we're going to do
ball.
green tomorrow because we'll be recovering, yes, we'll be recovering from the reaction.
Okay.
Now we know what the Fed has to say. We know it's March. So, I mean, let's come back to the market.
Maybe a relief rally for the weekend. Let's see.
All right, Ladi, thank you so much. Well, that's it on the show for today. Thank you so much for being a part of it. 1:30, Business Incorporated will be back to give you updates from the world of business. I'm Ini John Mekwa, and I'll see you again this time tomorrow.